Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is July 24th, 2025, and we're diving into Valero Energy's second quarter earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Valero Energy, a major player in the energy sector, has just released its Q2 2025 earnings report, and there's a lot to unpack.
Revenue and profitability overview. Let's start with the top line. Valero Energy reported revenues of $29.9 billion for the second quarter of 2025. How does this compare to last year, and what does it mean for their profitability?
Valero's revenue has decreased from $34.5 billion in the same quarter last year. Despite this, they managed to achieve a net income of $714 million, translating to an earnings per share of $2.28. This is a solid performance, especially considering the challenging market conditions. Additionally, they declared a quarterly dividend of $1.03 per share, which is a positive signal to investors about their financial health.
Segment performance analysis. John, can you break down the performance of Valero's different segments for us?
Absolutely. The refining segment was a standout, with an operating income of $1.3 billion, up from $1.2 billion last year. They achieved a record refining throughput rate in the U.S. Gulf Coast region, averaging 2.9 million barrels per day. However, the renewable diesel segment reported a loss of $79 million, a significant drop from a $112 million income last year. The ethanol segment also saw a decline, with $54 million in operating income compared to $105 million previously.
EPS forecast and market reaction. Valero's EPS of $2.28 exceeded the forecast of $1.76 from 7 analysts. How has the market reacted to this earnings beat?
The market has responded positively to Valero's earnings beat. Surpassing the EPS forecast by such a margin indicates strong operational execution and cost management. This has likely bolstered investor confidence, reflected in the stock's performance post-announcement.
Strategic initiatives and future outlook. Looking ahead, what strategic initiatives is Valero focusing on, and how do they plan to maintain their financial health?
Valero is actively managing its debt, having repaid $251 million of senior notes. They maintain a strong cash position of $4.5 billion, which provides financial flexibility. Strategically, they're investing in an FCC unit optimization project at the St. Charles refinery, expected to cost $230 million and complete by 2026. This project aims to increase the yield of high-value products, aligning with their growth and optimization strategy.
Key takeaways. In summary, Valero Energy has delivered a robust performance in Q2 2025, with significant earnings per share exceeding expectations and strategic initiatives underway. John, any final thoughts on Valero as an investment?
Valero's strong operational execution and strategic investments make it a compelling option for investors looking for stability and growth in the energy sector. Their commitment to returning value to shareholders through dividends and buybacks is also noteworthy.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on Valero's performance in the comments below.